Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, March 18th, the day after St. Patrick's Day. Hopefully, you guys are not feeling great today. So, anyways, let's jump over into the economic news releases today. We'll start off with the CPI or Consumer Price Index. This is one of the main gauges for inflation that the Fed looks at. This one and the PCE are the two main ones. The PCE is their favorite one because it kind of bucks the trend, so to speak, in terms of inflation that the Fed kind of gauges at. So this is the headline number. We had a 0.1% back in January. The forecast is supposed to remain at 0.1% for February, and it did. So it came in that forecast very, very tame, still very low. And then when you strip out the food and energy, we have the core CPI. This is just a CPI, but the core. So when you take out food and energy, this is the real number that the Fed will look at. So you got 0.1% again, forecast again 0.1, and it came in. So again, very, very, very tame. This is the core is what the Fed looks at, and again, if anything, it's disturbingly low for the amount of money that the Fed's been putting into the economy. So that is something that they will probably keep their eyes on. We also got housing starts for the month of February. We had 909,000 back in January. Forecast was supposed to dip a little bit to 908, and it came at 907. So close, but not no cigar. It was still a little bit less. And then last but not least, we got the building permits for the month of February. So we had 945,000 builders applying for permits back in January, and for February it jumped up to 1.02. So the season they're preparing for the new season where they can actually get out. January, of course, was a time where they had a lot of severe weather back east, so we're able to get a nice little spike in there. So the market, of course, will decent overall numbers. Very tame on the terms of inflation, maybe too low. That could be opposite trend we have to kind of keep an eye on. Housing starts within the spectrum, not too overly done, but building permits had a nice jump. So overall, decent day so far. So as a result, the stock market's up partially on that, but more from the Crimea annexation tensions kind of eased. So they're figuring that there probably won't be any military action anytime soon. And also, with the sanctions, they may not be as severe as that maybe people may think because they would kind of be shooting themselves in the foot as they, with the trade, they might hurt themselves. Especially with the state of the economy where it's at, they need as many partners as possible. We also got the start of the FOMC. This is kind of important primarily because we got the new Fed head in Janet Yellen. She's giving her first meeting as the Fed head, and tomorrow she'll be giving her press release, so all eyes and ears will be listening to her. The news, of course, they want to be listening for is the tapering of the quantitative easing, as well as if there's any new policy in terms of keeping the short-term interest rates low. All right, so let's jump over and take a look over at the bond market, see what interest rates are doing today. We did start off a little bit lower today, but since then we've closed upwards. Now we're touching the 10-day moving average. We're at 104.34, enough for a nice improvement in the interest rates as we closed 104.22 yesterday. So as you can see, we touched the floor, and then since then we've kind of pulled back from that floor, kind of bouncing back. All right, so again, a little bit of improvement in the rates, which is a good sign for us. And in the markets, the stock market's up. Uh, good news for everybody. All right, folks, stay tuned for tomorrow. Again, we got the big news tomorrow for the Fed's first press release with Janet Yellen. We'll see how she responds. And thanks for watching. I hope you guys have a wonderful day, and we'll see you guys tomorrow.